And mainly the reason is the liquidity. They need money, and the best way to and fastest way to get money is through surrendering the policies. So here what I thought of a concept, why not continue the risk benefit of the policyholder?
Okay, but I believe insurance companies, LIC has right to reject the assignment?
No. You run the risk of that. So they will warn you for that.
What if you can sell your life insurance policies the way you do stocks and bonds? But trading in life insurance policies is not allowed in India, meaning we don't have any secondary market for the same. But you can very well assign your policy to someone, meaning A can sell or rather assign their life insurance policy to B, but B cannot sell it to C or D. So with this one-time assignment feature available, Ketan Mehta, who is founder and director of ACESO Endowment Services, he came up with very interesting concept which is called ALIP, meaning Assign Your Life Insurance Policy Program. With this ALIP feature, you can discontinue paying premium of your life insurance policy, but part of that benefit will still continue. So welcome, Ketan.
Thank you for calling me. And allowing me to share the information with your viewers.
Correct.
A very unique
ALIP
and a
is
first
very
time.
unique thing. And with ALIP, what you can do is that people, they can surrender, instead of surrendering their policies, they can discontinue it, they can stop paying premiums, but part of that benefit still continues.
Yes.
So this is the unique thing about it. So tell more about it. What is it and what is assignment, what is selling of life insurance policies? A lot of technical terms involved here.
See, globally, insurance industry is a well-regulated market.
Right.
Including India.
Right.
And most of the policies, because of the number of people, it is well regulated by RDA. It affects the most of the section of the society. Now, if you see 50% of the policy do not see the maturity dates.
Correct.
Either because of surrender payout or it lapses. The people lose interest in paying, continuing with their premium, and they lose all the risk benefits.
Right.
Now, ALIP is an alternative for surrender and lapsation. The tagline of my company is say no to surrender and lapsation. So what a policyholder can do? Policyholder, as per the policy contract with the LIC, which is issued by LIC, he can assign the policy for a consideration in case of our product or to a bank to take a loan.
Consideration, if you can explain.
Is the value of the policy. At a particular point of time where he has paid an X amount of premium and the bonus has been credited to his account. And on the basis of that, every insurance company give you a surrender value quotation. If you want to encash it today, what is the value of the policy? So that is what is called surrender value, and that is what is assigned to any party who is going to provide you cash. That is what assignment is. Now, assignment is the legal right of the policyholder. Now, policy contract is the personal property of the policyholder. He is the sole owner of the policy.
Okay.
It is the movable assets. It's a movable property.
Right.
From where it designs and gets the power to transfer. Like you have in immovable properties.
Right.
It's an actionable claim. It has all these features, life insurance policy. So it gives him a lot of powers to do whatever he wants with the policy. And as per the amendment of Insurance Act in 2015, initially you were allowed to transfer it to anybody. A can give it to B and B can give it to C.
Okay, so trading concept was...
Yeah, you can call it because this is very worldwide. If you see in UK, it's called TEP market, Tradable Endowment Policy.
Okay.
And all Commonwealth countries have the same Insurance Act of 1938.
Okay.
So this is prevalent in all the Commonwealth countries, whether it is UK, Germany, Canada, then South Africa,
and
Singapore.
It existed in India also, but after 2015
India,
amendment,
but nobody did it. See, initially
lack of awareness could be a reason, but concept existed.
It was a power to assign. You can assign your property.
True.
So, but nobody utilized it. Nobody thought of it.
Okay.
And secondly, our market is totally unique because we exclusively deal in endowment policies. Now, endowment policy where you have a fixed maturity date. You pay an X premium for a particular year, you get bonuses on a particular date, you will get your money. And LIC issues 80% of the policy are endowment policies.
Correct.
The rest all are whole life policy where you get money only on death.
Death.
So we are not dealing in that particular
You are
policy.
only involved in endowment.
In endowment. So different plans are there, different benefits are there. If you see last year's LIC's audited figures, the surrender payout was almost 1,33,000 crore.
Okay.
Before that, it was 1,13,000 crores. It has
growing.
been growing like anything.
So people do not want to continue with endowment
Many
policies.
reasons are
could
there.
be.
One
Could
of
be
the reasons is
liquidity
that.
reasons, not.
And mainly the reason is the liquidity. They need money, and
Correct.
the best way to and fastest way to get money is through surrendering the policies. So here what I thought of a concept, why not continue the risk benefit of the policyholder? You pay the same, I pay the same amount what LIC pays. It is exactly the same amount. And I continue the risk cover.
Okay.
Now another uniqueness is that the policy is assigned to a trust, a registered trust, which is managed by SEBI registered trustee.
Okay.
So he is sure of his benefits. In the event of death, if he goes to the trust with a death certificate, he'll get his benefit. And the trust defines everything in it. What should be paid to him and what would go to the investor who has invested in it.
So maybe you can explain step-by-step process that instead of the person, if I am a policy holder and I decide that I won't go to LIC and surrender it, rather I come to you. Then how do I approach you and the step-by-step process of assigning the policy to you, the trust?
We have used maximum technology in this. Our platform is totally web-based. Policyholder anywhere in India can log in, first of all. There is an option available for the policyholder and the agents of LIC. As soon as he logs in, his PAN number is asked, his telephone number is asked.
So what is the website?
It is www.aceso.in.
Okay.
And as soon as he log in, he gets an OTP. So we know who is entering the data. Every policy information is available on the first page of the policy copy, policy bond, what we call it. You key in the data. As soon as the data is filled in properly, we do the due diligence. And once we approve it, at the time of approval, we also send him a quote. What are the risk benefits available year-wise? Let's say you are assigning the policy in 24. What risk benefits you'll get in 25, 26, 27, up to the maturity date. Okay. So he is aware that this much I can get.
Surrender value also and death benefit.
Surrender value also. And for that, actually what we do, in order not to have any dispute, it is mandatory for him to give us the surrender quotation issued by LIC of India. So we pay exactly what is there in the LIC of India.
Okay.
So there should not be any dispute basically.
Right, that how you are paying lesser.
And then he has to give policy bond, his self-certified PAN card copy, his cancelled bank check, then KYC of his nominee in the event of that who has to be paid, his PAN card and all that. We collect all that at the time of assignment.
Okay.
And once the document reaches us, the another USP is that we within 48 hours, we make the payment to the policyholder's bank account.
Okay, but I believe insurance companies, LIC has right to reject the assignment?
No.
If I think there are 3 reasons defined in the Act.
See, the 3 reasons what are defined is it has to be for a consideration. First reason, so which we are giving. It has to be bona fide. Now, it is bona fide because we are continuing the risk cover.
Bona fide, if you can explain to viewers.
See, insurable interest in the policy of the policyholder will be there till maturity. That's why it is bona fide. Actually, it is not required as per the laws. Insurable interest is only required at the time.
I should have a insurable interest with the person who I am assigning it to, or what insurable interest?
Of the life assured.
Of the life insured, okay.
He will have an interest because in the event of that, he is going to share the benefits.
Yeah.
That is
if
what
that
is bona fide.
benefit is not there, then no insurable interest for policyholder, so that cannot happen. But in your case, you are providing that benefit, so insurable interest exists.
Is there. Thirdly, public policy. Now, that has been well observed by the Supreme Court in the judgment. Public policy does not apply to this product.
Public policy?
See, it should be in the interest of public policy, this assignment.
Okay, assignment should be in the interest of.
As I told you, that because he gets the money, his risk cover continues, it is in the interest of the. And the third is trading. Now, when he assigns the policy to the trust is prohibited from trading. It's one of the conditions. Trust cannot further assign the policy. It will remain always the property of the trust.
Yeah, because A to B has happened, but B to C.
You are not allowed to do now.
Correct.
So that is what. So we meet all the criteria of the amended act.
Okay.
And if you see the judgment of Supreme Court, they have commented on my assignment prior and post amendment of the act.
Okay.
And they say the argument of the LIC is without merits, and they have dismissed the petition.
Okay, so this assignment with a company like yours, trust like yours, is very much possible and within legal boundaries.
And after the amendment, there is a directive from IRDA to LIC to register the assignment to my trust.
Okay, all right.
So most of the factors have been taken care of.
Okay.
And I have been doing this since 2018. And now LIC coming out with that notice, it was quite surprising. But then anyway, they have not named my company.
Right. And now to discuss your business model. So all policyholders, if they assign the policy to you, and you are going to get maturity benefit when the policy
Trust is going to get the maturity.
Not you, but the trust is going to get the maturity. So what's in it for you? So you are going to wait that longer? Or once policies come to you, then what do you do with those? You
have created a very unique financial model for this. How to fund a LIC. Since policies are assigned to the trust, I create a basket. And for example, in the bank, if you go and put the money, you put in FD, you can put 2 years, 4 years, 5 years, and 10 years, whatever you want. Similarly, the policies which are maturing, let's say in 2030, I create one PTC for that. Maturing 2031, depending on what maturity.
Pass-through certificate, you mean?
It's called pay-through certificates. It's like a receipt. As bank issues the FD receipt, I issue a pass-through, pay-through certificates.
So maybe simplifying it more, first you talk about how do you arrange funds so that you are funding policyholders and giving that money in 48 hours. So the funnel of your funds, how do you source of your fund, and this part, and then talk about what do you do with policies.
See, at present we have a corpus of our own fund. Everything is self-funded.
Self-funded, it's bootstrapped.
Yeah, totally bootstrapped. Because we do not want the investor or the holder of the PTC to come into picture till the policy is registered in the name of the trust. So it's a zero risk game for the PTC holder.
Okay. PTC holder thing is a bit complicated. I really want you to simplify.
As I told you, it's like a FD receipt, it's a certificate. If you will go to a bank, you put your deposit, they give you a deposit. Similarly, when they come to us and they give the funds, they are issued a certificate called PTC. It's called pay-through certificates. And as I told you, it is well defined which year the policies are going to mature. The average size today is around 1 crore. Every PTC.
What is the difference between pay-through certificate and pass-through certificate?
Pass-through normally is used for the when bank sells their entire portfolio, let's say vehicle loan, home loan. It's called pass-through. But here the security belongs are assigned to the trust directly. So they are the legal beneficiary in the event the maturity comes in. So that is the difference. This is defined by RBI.
Okay.
Under which category we should be covered.
Okay. So, a bit about buyers who are getting these pay-through certificates.
Anybody can. It can be individuals, it can be companies, it can be institution, it can be bank. See, let's say when the market develops, this is a very good product as a non-SLR securities for bank to invest. Because we offer a return which is higher than the central government securities. And it makes a lot of sense for them to have a better earning, which has a AAA rating. Now it is issued in the demat form.
Okay. So
all those features are there which is required for a security to be held.
Okay. And since your company may not be that known to policyholders, so how do they trust you that the debt benefit, part of debt benefit that they are supposed to get in case of an eventuality, then is it something a trust deed you create, or exactly how should they get confidence that in the future this money will come to them?
See, the trustees of this company are SEBI registered. They are controlled by SEBI. So it is mandatory for them. And secondly, my trust is only a custodian. So it manages the cash inflow and outflow. It is the duty of the trustee to see to it that as per defined in the trust deed terms, they are making a payout.
And have you made such payments so far?
Yes.
Debt benefits have gone to...
It has to be made. It is mandatory for the trustee to do that.
If you can shed some light on the business that you have done so far.
See, I've been doing this business since 2003.
But a lot of
legal matter was challenged. We went to Bombay High Court. And then We won Bombay High Court. They took the matter to Supreme Court. And surprising part was, we were the first respondent in Supreme Court, and second respondents were IRDA. So they were with us. And when I started this business, they issued a letter to LIC directing LIC to register. In spite of that, they went to the Supreme Court. Anyway, that's why they lost. Because assignment of a policy is the legal right. It's an infringement on the right of the policy if they refuse.
Right. And it's a win-win situation, and here
Yes.
even LIC gets the benefit because their persistency ratio
Their cash,
maintains-
see, they make a huge outflow on account of surrender, and lapsation stops their premium. But in our case, they don't have to make the payout. The funds will be retained with them.
And trust is paying premium.
Yes, and the lapsation may we revive the policy at the time of acquisition, at the time of assignment. So, if you see today the figures, total payout made by LIC on account of surrender, maturity benefits, death benefits, and the premium collected by them, the AUM is hardly, I think so, to this year it was only 1 lakh crore. In fact, they are supposed to increase the AUM in order they can earn a higher bonus rate, and at the same time they can give higher returns to the equity investors. Now it's a listed company.
Correct.
And the major beneficiary of this is the agents. Because
their
once we pay the
commission will
premium,
keep
they
coming.
continue to get their commissions directly from LIC. And a lot of other benefits are attached to this, which agents enjoy.
Okay. And now about buyers, that why should buyers come to you? What's in it for them? Why should they buy or pay 2 certificates? What interest do they get if they go for it?
See, first of all, it is the safest product in the market. Having a triple
Sovereign.
ACESO rating.
Correct, AAA rating.
And you get your payment on the day it is mentioned. Because now everything is technology driven. You get the money exactly on the same date, and we disburse the money to the beneficiary on the same day.
Okay.
We have created that structure, and it goes directly to the demat account of the PTC holder.
Okay, and how do they find it out? As in, they'll have to come to the website or any exchange they have to go to? How do they spot this product?
They come because, as I told you, I have a pre-developed, because once they understood the concept, a lot of people are interested.
So they directly approach you?
Yes.
And mostly institutional buyers must have approached you so far?
Mainly HNIs and wealth office.
Okay.
I wanted to create actually a smaller platform, but the cost factor was not making it viable. Actually, I wanted 10 lakhs size.
So that
everybody can come
market size could be...
So a lot of people can benefit. See, trusts can benefit, clubs can benefit. Where they have huge funds, they do not know where to deploy.
Right.
And the returns are less.
They have lot of funds with them, but no safer instruments to invest. Right. And what about me assigning my policy probably to my friend? Could that be possible?
See, that is allowed, but there runs a risk. Suppose it's a big amount policy. If she comes and kills you, then what happens? That's why they don't permit individual cases.
Okay, so that right to rejection by insurance company will
normally
come
they cannot reject, but you run the risk of that. So they will warn you for that.
So better to go with a proper
an institution
setup
or a bank or to have the liquidity.
Right, that is there.
See, it's a huge alternative for surrender and lapsation, the product. And if you put all insurance companies together, because at present I'm doing only LIC because it is a sovereign guaranteed product.
Right.
Even if LIC doesn't pay, Government of India has to pay.
Right. And now about having a secondary market of life insurance policies the way we have for stocks and bonds. So should it happen in India, or do you see it happening in India going forward?
Yes, it should happen. In fact, I'll tell you, when the matter was going on, IRD had called an insurance council meeting where all insurers were there.
Okay.
And they agreed to and they have given to him in writing that this particular type of structure should be permitted for the benefit of the policyholder.
Because then even surrender value could be higher than what
if you see
insurance
UK
company is
market,
offering.
they almost get 30 to 40%. And in fact, it is mandatory in UK market. Insurance company has to make aware the policyholder there is another market available where you will get a better valuation of your. But one thing is that what I am offering is not offered anywhere in the world. That is the risk benefits.
This is
This is the USP of my product.
Okay, so let's hope that in future we do get a secondary market in India.
It will happen, because if you see now a lot of abroad funds are coming in. JP Index, Brahman. So you are going to see the interest rate falling in India.
So such kind of products are needed.
Plus all those interest rates are taxable. Here, one more uniqueness is that it is exempt.
Majority amount is tax free, so that is there. Right. So to summarize our conversation, if you can tell people that why should they not surrender the policy and rather come to you and assign it to a
because the risk cover continues without paying any premium, without doing any service.
Correct, and still you get the debt.
Still you get the debt.
Okay, so if you can share any case study with us so that people can understand exactly what the product is about.
See, I have put few testimonials on my website, and one of them I put a very interesting story of a gentleman called Ajay Arora. He was the MD and CEO of Datacom, who has developed software only for LIC agents. He has been doing this since last 30 years, and he understood my concept very well. So he was in a lookout for a house in Bombay where he needed immediate liquidity, how to encash it. So he was going to surrender his policy to LIC of India, as everybody does. So when I told him this, why don't you assign it to the trust? He immediately agreed, and I think so we paid almost 4 years of premium. At that time, he got around 15 lakhs, whatever was the valuation, exact value what LIC had given it to him. And over a period of time, he was a golf player. Okay. So he went to play golf, and as you know, the golf gardens are uneven, and he was on the cartwheel, and at a particular point, it overturned and he fell, and he had a brain hemorrhage and he passed away. And because of that, his family got 39 lakhs additional, 15 lakhs what he got earlier as a value, and plus this risk benefits.
Right, and had he surrendered the policy, you would have only
yes, the risk cover would not have been there. And this risk cover, as I told you, is without paying any premium.
Right.
And without everything is done by my software.
Now, any closing thoughts for our viewers to summarize this whole conversation?
See, the whole idea is to find an alternative to surrender and lapsation. So if you see point by point, how does it benefit? As I told you, the first benefits the policyholder, where he gets money in 48 hours. That is the first benefit. Secondly, let's put the insurance agent or advisors. They continue to get their commissions directly from LIC. And thirdly, as I told you, insurance companies' cash flow will improve like anything because they don't have to pay a surrender value to the policyholder. Fourthly, I would say it's a unique product in the instrument for a person to come and invest to get the safe and fully liquid return. It can be encashed at any point of time. So it's a win-win for all the stakeholders involved in LIC. That's how I would conclude.
Truly. So congratulations for coming up with such a unique concept and benefiting all stakeholders.
Thank you very much for calling me.
So if you're facing issues in paying your life insurance premiums every year, then you must check out this one-time assignment feature instead of surrendering your policy. Thank you so much. Thank you for joining us here today.